Hi, this is Amir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 16th of February, and we're above 8,000 on the FTSE 100. I didn't think I would live long enough to see that. I would like to live long enough to see the FTSE at 10,000, which I think is probably the level it should be. After 20 years of being in consolidation mode, we finally broken out. As far as the near-term levels here are concerned, the initial resistance around 79.50 for February, well, one of the recent highs, and the recent support area around 79.20 give the clues to where this market might find support. Ideally, we stay above 79.50 and then head towards the top of that rising trend channel from the end of September, currently pointing to 81.60, which I was looking for by the end of next month. We might get relatively close to that even by the end of this month. RSI now in the overbought territory, so above the 70 level, but nothing too alarming yet. You can see, obviously, though, in the recent past, December and in January, we did tick back down from there, so something to be mindful of the situation there. That's why 79.50 is a good stop loss probably for people who are long of this market or would like to see a warning if we were going to break down. On to the DAX, and here you can see that managed to regroup, and as we thought we probably would actually, after the rebound off the floor of the gap there from the beginning of the month and recent support around 15,200. Just ticked up to that resistance line projection there from September around the 15,600 level. Above that, on an end of day close basis, looking for as high as 16,200 by the end of next month. I mean, obviously it could be the end of this month, but just going for the conservative time frame on that. But everything here hinging with the DAX on holding 15,200, which currently seems to be plausible and feasible. On to the Dow, which has continued unbelievably within this range between 33,600 and 34,300. It was nearly a push higher earlier in the week, but was back in there. What will be fun is when we eventually emerge, and ideally we emerge on the upside, given that we've been finding support at the 50-day line, on the right side of the 50-day line, and also double support there on the RSI 50 level. So if you're a bit of a gambler, you'd like to be gambling on a break through 34,300 to hit 36,000 by the end of next month. Below the 50-day line and 33,600, we're looking at a dip, hopefully the final dip towards 33,000. But at the moment, the Dow seems to be on track for a little bit of a breakout. On to the situation of Bitcoin, where after that little what's turned out to be a bear trap below 22,000, we are now, well, back at recent highs. So the only thing left to do now is to break through 25,000, the old August resistance around that level, 25,200. End of day close through that, and we're looking for, as we have been quite patiently looking for, a June broadening triangle target as high as 30,000, which I'm suggesting by the end of next month. But hopefully, given the push that we've had at the moment, it would be sooner than that. Bounced off that uptrend line in the RSI window as well, so that's been useful. Even though we went briefly below RSI 50, we actually found support on that RSI support line. So all good there. And in fact, the recent support above the 50-day moving average, the rising 50-day line, was also a sign that we were heading higher. And let's see if we can have a decent move there on Bitcoin at long last. Stock which is very much related to Bitcoin, given that it makes them, is Argo blockchain, and here we've got had the second bounce above a rising 50-day moving average, echoing what we saw at Bitcoin. That is now at 11 pence. Above 11 pence, we are looking for a move to retest recent resistance. At 20 pence, best case scenario target over the next 1 to 2 months up to 30 pence, which I suppose would need quite a big push higher on Bitcoin, but maybe we will get that. Remember that the rally here started with an island, bear trap island reversal, and we had an unfilled gap to the upside there from the end of December. And really, it's been a very strong technical rebound, even though some people might be scared of the fundamental position there. Another stock which has taken its toll on some of the bulls over the recent past is Audioboom. Here we had that almighty double top there from £22 down to around £3.50 last month. Nice recovery now though, and the reason for the relative enthusiasm is the way that first we hit our target off the 390 resistance line break there. We were looking for £5, above £5 we were looking for up to the 200-day moving average, and at the top of that broadening triangle from September as high as £7.30, £7.50 over the course of the next few weeks. It might be a bit sooner, but let's say £7.50 by the end of next month would be a conservative time frame and potentially a conservative target. The candle today very strong, opened at the low and so far at the high of the day. So let's see if we can get towards the £7 level at least by the end of this week. At this stage, only well below the last support there, 470, really delaying the upside scenario. And we're helped today by the way that the 50-day moving average is now starting to curl up. We had the rally forecast by a bullish divergence line there and the break of that November resistance line. Moving on to Bushveld, which looks like it's finally trying to get its act together here. We've broken a line of resistance from September. We had a gap close buy signal there around the 5p level, which was basically start of the week. And above that, looking for the shares to hit the top of that rising trend channel from September as high as 6.75p by the end of next month. Only well below the 50-day moving average, which is now rising, would really delay the upside scenario. Stock, which I don't normally look at, but has such an incredible chart, is CPP Group. Here we've got a bear trap island reversal, affected with that October to January low there for the shares. Another gap higher today, and at least while we're above the floor of the gap there around £1.85, looking for not only a retest of the January peak at 236, but up to a June resistance line projection as high as 280 by the end of next month. Difficult to describe what that pattern is, the reversal pattern. You could say it's a cup and handle and saucer reversal, maybe even an inverted head and shoulders with an extended head, but whatever it is, the double gap higher there back in January really set the scene for a move higher on that V-shaped bull flag, pointing to 280 by the end of next month. Moving on to a stock which is not normally appearing here on a very regular basis, Essensys. Here, a nice breakout hit through the sideways bull flags formation that we had there over the last week or so, through 52p and above 52p, looking for as high as 65p with that U-shaped reversal that we've had. The trendline break there from October and the 50-day moving average did the trick last week in terms of turning the shares around. Next situation is Falcon Oil and Gas, which has had good news from Beetaloo, I believe, and hitting our first target there around 10p at the top of the June triangle. New leg up while we're above 10p, could head us up to 14p by the end of next month while we stay above the 9p area, which is recent support. KR1 as one of the better stocks on the Aquis market, and here we've had this sideways consolidation, and expecting that now to break on an end of day close through 55p and take us to 75p by the end of next month, presumably also helped by the read across with the crypto prices improving at the moment. Trendline break on the cards for Mosman Oil and Gas, that broken a line there from October, 0.06p, and above that we're looking for 0.1p, maybe as soon as the end of next month. A bit of a bear trap effect there as well, with the move below 0.05p, giving that bear trap effect, and now we're seeing a reasonable rebound for the shares. Pantheon is next, which is a famed bear target. What's going to be interesting here is that we've had the rally from below 40p and up to the 50-day moving average. Let's see whether we can get through that. We had a double top through that, a double bull trap through that in December, and then we went to new lows. So it's quite important here that the shares not only break the 50-day moving average at 61p, but also that line of resistance from August since the bear started attacking. If we get through 63p, then we could have the chance of a retest of the main post-December resistance area and the 200-day moving average at 90p. Otherwise, there's a risk of a retest of the 40p area. A couple of stocks to go now. One is TAP, which is Also benefiting from the Bitcoin situation at the moment, the shares breaking out of that recent consolidation. Remember, we had an unfilled gap to the upside to start the trading after the RTO, and now we're looking for 7 pence at a line of resistance from this time last year to be hit hopefully by the end of next month. Upside bounded while we're holding above 4 3/4, which has held as support of late. Finishing off with Tertiary, and here just the beginnings of a trend line break there from back in October. That was around 0.13. End of day, end of week close above that. We could be heading back towards 0.16 to retest January resistance. And obviously, we don't want any more new lows below 0.12. We have the unfilled gap to the upside back in September, which was a bear trap gap reversal. And the only disappointment here is obviously that we came back so sharply from that rally towards 0.13, but maybe we'll get an equally sharp rally for the shares because they have done that before. That's it for me today. More updates tomorrow.